to computer. So we're just gonna start off really nice, and I think I'm actually gonna I just gotta take away some things here on my screen because that's not for everyone to see. So while I'm gonna show you a little bit from the session today, and for you guys that missed that. And during that time, just write some questions in the chat so we can start off with some Q&As after that. Because I want to show you guys what happens even to the best of us, all right? So you can see my screen right now, right? Give me a thumbs up. You can see it. Okay, perfect. So this is the trade I sent out on Tap to Trade. We took a really small loss on this one. And why I'm saying we took a really small loss is because we had like a 14 pip stop loss-ish. And we took a 2 pip stop loss. So for me, it's kind of a break even, but I'm counting as a loss anyways. But I just want to show you what can happen in the market, and it really isn't your fault in this happening. So London session, no volume at all. No volume at all. Right? I don't care what anyone says. This London session is freaking boring at the moment because I don't know why we're not moving at all in the market. Asian session usually is the market that goes sideways, but now London is the market that goes sideways. And it's basically because I know I've gone through this before, but we have three types of sessions in the market. We have Asia, we have London, and we have New York. Right? These are the three sessions we have. One session is going to go up, one session is going to go sideways, one session is going to go down. All right? This is basically how the market moves. And sometimes Asia goes this way, London goes up, New York goes down. Sometimes Asia goes up, London goes down, New York goes sideways. But we're always going to keep in this frame. If one does one thing, the other one is going to do another, and the third one's going to do the third thing, all right? That's how a normal market looks. Sometimes we have high volume, news, other things that affects that we're going bearish, for example, or bullish. But in the most cases, we're doing that. And what can we see on today's chart? So we're gonna just stop these guys at the different time frames. There we go. So we have a small push on Asia, or a small bearish, or actually, no, I'm just gonna do it like this. We have a sideways on London, and then around here, we actually start New York opening, but most people count it as starting at 15:30. But the real session time starts around 2, right? And what happens in 2? We do a little bit of push, just to take out London, and then we push down. And this is what I expected to happen in the market on London session. I expected us to come up, take out the Asians, and then go down. Oh man, that sounded so wrong. The Asian session, guys. The Asian session. Um, so we're moving up, take out the Asian session highs, Asian session lows, and then we move on. But we didn't do that as fast as possible. We moved sideways, and then came the drop. This is the drop I wanted to see, but we just took out the Asian lows, wicked out, took liquidity down here, and then pushed back up. The reason why we got stopped out is because we had a market structure on the 5 minutes, which showed a bearish structure, all right? This is what we saw. I feel like we have a lot of things on the screen now. There we go. So I had this bearish move. We put the stop loss above the previous high on the 5 minutes. We came out, pushed out to take out the high, took out some liquidity for value gaps, came back down. And then we had this move as well, took out the full fair value gap, and now we're doing the bearish move. Gonna probably continue in a direction like this, but doesn't matter. The reason why I'm saying that this was a bad trade from me, why we got stopped out, is because we shouldn't have moved our stop loss until we saw this, right? This move could tell us to move the stop loss in one way, but we're actually never creating a new low after that move. So what we should have done, I'm just hanging myself out for you guys, but it's good in educational purposes. What we should have done is wait for this move to happen, where we're actually creating a new low, breaking the low we had before and creating a new one. And now we can move stop loss to here. Once we have a high and a new low again, we can move the stop loss down here. This is how we should move the stop loss. But a little bit of emotional thinking from me. I didn't want to take another big loss on a trade that didn't move. And when I saw the liquidity sweep here, I didn't want to be in it. Because usually when we do a liquidity sweep on Asian lows or Asian highs, we're getting a big push in the other direction. So didn't want to take a big loss on that trade, trying to save the account a little bit. But it is what it is. I think it's really important to be transparent about these things. That even me, I've been trading for 5 years, the same kind of strategy, the same market. I'm still doing these kind of things sometimes where I'm moving stop loss too early or I'm taking entry too early or whatever the case may be. But it's important that we actually study it and learn from it so we don't do it again, right? And even though it puts me in a bad place to say that I shouldn't have done this, I think it's important for you guys to learn that even me as an educator does this sometimes, all right? It doesn't define your trading doing this once, all right? Doing this twice, it doesn't define you. If you do it every single trade, yeah, then yeah, you should really, really change that. But once in a while, it's gonna happen where you get too much emotions, you get too much in your mind, and you're gonna do a decision like this. And it happens, all right? So we're just gonna move that past us. It was a good trade. That's the most important part. We had a really good trade. It's gonna keep going down. The direction was right, the bias was right. So we take that with us for the next coming days. All right. But with that, we're gonna do a Q&A today. So if you have any questions, you can either write them in the private chat to me, you can write them in the big chat, and I'm also gonna make you guys able to unmute. Wait, there we go. So you guys can also unmute if you have any question you wanna say, because you can say it in a different way than you're writing it. How do I detach myself from outcome of my positions? It's that's a hard question to answer because it depends on a person to person, right? But I think I said it when Michael was interviewing me, I think, or something like that. But I said it on a previous call about emotions in your trading. And the most important part is to have a stable finance, all right? And what I mean with that isn't that you should be rich or you should have $1 million on your account. You should not be depending on your trades to go right direction for your bills, right? I think that's the best way to put it. You should not be depending on your trades to pay your bills. Because then you're in a position where you need to take a trade and you need to win the trade, all right? And you don't want to be in that position. The only reason why we take trades is because we see a good trade. That's why we should take trades, not because we need to take trades. And if you're thinking like that, you're gonna see good trades and you're gonna be more comfortable in keeping those trades open. You're gonna be more comfortable in keeping the trades in if you don't feel depending on your trades and you know that it's a good trade. Sometimes you lose good trades, but overall you're gonna win more than lose. And if you have that mindset where you only take good trades because it is a good trade, then it's easier for your mindset to detach from all of that. So yeah, exactly. The best trade is sometimes not to take a trade, right? That's one of the things. I had a mentor that teach me a long time ago, and it really, really stick to me because you really want to take trades sometimes, but sometimes it's better to not take a trade. So I hope that answered the question. Do we have any more questions? I feel like you guys are not really taking advantage of asking questions because when I stop this call, I know that I'm gonna get 1,000 messages about trading. So I think we can just save my time and you guys put it in here. And you can also send it in private if you don't want to ask it in the big chat. I'm not gonna mention who's saying what because I just want to help you guys. I want to get you guys on the right track on trading. Um, but yeah, if we take trading in general, the most important part to focus on would be the emotional side of trading, the mentality in trading, and not the actual techniques of trading. Because learning a strategy takes like a month or two tops. But understanding how to manage your emotions trading is going to take longer. So that should be the real thing you're focusing on in the long run. Nebby, you have a question? I'm here to answer.
Great. Thanks for answering my first question. But my second one, something that's been a little rough this week, how do I say, mentally prepared to execute on my plan when the markets is going through a shift or it's totally different, like this week, for example, or last week also.
Mm, do you mean like be comfortable in taking the trade or your
Be
mindset in,
being comfortable, but also being sharp.
all right. I think one of the most important part that people missing in trading in general is backtesting. Because many believe that backtesting is to test your strategy on win rate versus like loss and how much pips and percentage you can make backtesting, but it's really to get you comfortable in your own strategy and get your belief level up on your strategy, right? That's the important part of backtesting. Because if you don't have a belief in your trading strategy and you're not comfortable with your trading strategy, you're always gonna overthink your entries, you're always gonna overthink your trades. But if you have back tested a track record of your strategy and you know that the strategy is good, you know that you're gonna be profitable long term, you know that this strategy is something you like, and you also know how the strategy works, it's going to be easier for you to actually execute on that trade. It's going to be easier to be comfortable in taking the trade, and it's going to be easier to not overthink the trades. Um, the most like common thing in why we take bad entries, why we miss out on good trades, why we take stop loss when we don't need it, is because we're overthinking the trade and we're not comfortable in our own strategy. And that's what backtesting is for. All right. I've never used backtesting to see how much money I can make, how much pips I can make, how much percentage I can make, how big my win rate is. I'm doing backtesting to try out the strategy and be comfortable with my strategy and know that this is working. All right. Then you're gonna see the win rate, of course. You're gonna see the pips you're making, the money you could have made, all of that stuff. But it's not that important. The important part is one, that the strategy is profitable, of course, and two, that you're actually comfortable in taking the trades. Because if you have a track record of, let's say, 100 trades, you have the same reason why you're taking the trade every single time. You have the same strategy and same setup and hopefully the same pair. Um, you can do other pairs like trying out different pairs, of course, but it's gonna work best on one pair because then you have the most comfortability in that pair. Then you know when you're starting to do this on a live account or a challenge account or whatever, and you're training yourself, that this is a good strategy. I'm comfortable in my strategy and I know how to do these markups. And then when you see these markups on a live trade, after that, your subconscious is going to be like, all right, over 100 trades, I won 80% of the trades and I'm profitable. So why shouldn't I just take this trade? Because it is a good trade. And then you're not going to overthink it. You're not going to take a bad entry or have FOMO and all of this stuff. You're just going to do it automatically. So I think that's my answer. I hope that was a good answer for you. Um, Next question. When you start, is it better to start on a demo account or just go in with $100 on a live account? So this is a personal preference. I would say it depends on you as a person and how much money you have. Just to be completely honest here. If you have $100 you don't care about, it's better to do it on a live account because then you're gonna actually have the emotions of live trading. You're gonna have the emotion of making money versus losing money right away, and you can start dealing with it right away. But if you're not in a position where you're comfortable in losing $100, then you should start on a demo account and start doing back testing and like trading results on demo accounts. For me personally, I've always done it on live accounts, no matter if I'm back testing, trying a new strategy, working with a new educator, and whatever the case may be, I'm always doing it on live accounts because I want my emotions to fit in on my back testing. Because like now I'm also 5 years into the business and into trading, so I know that my trading is gonna be good. It's my emotional side I need to work on if I try out a new strategy or try out a new pair. It's always the emotional part that's gonna sub in for me personally. So I always want to do it with a live account, and I always put in money where I'm not like gonna be broke if I lose it, but it's gonna hurt. It's still gonna hurt, all right? Because then you really feel the emotional part of trading when you're trying it out. But for a completely new person, it's always better to have a demo account so they don't go in and lose $1,000 or $100, 1,000 crowns. Because if you really like, let's just say you start this week and the first like week of your trading career you lose $100, it's gonna be hard to come up from there. And most people don't have the mentality to build up from there. Even though it's good for you to come in and lose, it's gonna be hard for you to actually overcome it. For the people that overcome it is probably the ones who are gonna be the most profitable in trading, just to be honest here. But it's better for like the man like emotional side of this business if you're completely new to just start off easy and simple, and then when you're comfortable in actually trading then you can put on money in a live account. So the steps would be first demo account to understand how trading works, to take trades, learn, sell, buy, stop loss, take profit, all of this stuff. When you're comfortable in taking trades, put in $100 on a live account, start trading with someone, or start backtesting your own strategy and results. And that way you can build it up from there. Um, Hopefully that was a good answer, but that is just personal preference. And for you guys who are new, I'm usually doing personal preference on all of my answers because I don't want to sit here and lie to you about something I wouldn't do. So I'm just saying what I would do in these scenarios. And consent. No, yeah. Should you trade every session or special in one? This is depending on strategy, I would say. If you have, how do I answer this the best possible way? So I would say this is really depending on strategy overall. Um, I would say if you follow someone like Preston, he's a really, really good educator, amazing human being, and I just love the guy's energy. If you haven't been on his live sessions, you should check it out. He's an amazing person. But if you follow someone on Preston who trades DE30 or Dow or US30 or whatever the name of brokers is, his strategy is New York Open, right? So then you should focus on New York Open. But if you trade a strategy like me, for example, where I'm looking at market structure and I'm looking at the price direction overall, it doesn't really matter what session you're in because the market is gonna form for you guys for your trade. So it's more depending on the strategy which you're trading. If you're trading a strategy which is depending on a specific time, then you should focus on that time. If you're not, then yeah, just learn out the strategy and then focus on that session time, I would say. But for me personally, I don't really care what session time. I'm just looking at market. Um, Oh, this is a really good question. If there's any certain days period you avoid euro, and if there is, why do you avoid these periods? So this is because I only trade euro USD, if you didn't know, or basically only like 99% of my trades is euro USD. I avoid NFP weeks and most importantly NFP day, and that's Friday, the first Friday of every month. Unless the government is on shutdown, which it is right now, then you don't really have news days. But I'm focusing on the first Friday every single month. I don't trade at all. I don't look at the market at all. I'm just taking early weekend, right? Don't care because I'm not trading on news with NFP, right? That's CPI news, PPI news, all of the big red maps. I'm avoiding totally because I'm not putting my account or anyone else's account at risk for news overall. Um, I'm also trying to not trade overall on Fridays because this is just like the emotional side of trading as well. We are human beings, and it's human beings that are controlling the market, all right? There's human beings pressing buttons at big banks. And for everyone who's working right now, for everyone who's been working, if you're working Monday to Friday, are you most productive on like a Tuesday or a Friday? I'm gonna guess it's a Tuesday, right? Because on Friday, everyone is thinking about the weekend, going home early, and they don't really care about work because it's Friday, all right? And when I look at it that way, I'm like, I'm not putting my money at risk for someone who's like grabbing a coffee when they should press the button, all right? It's not exactly that way it works, but you understand my vision on it. So I'm trying to avoid Fridays most weeks when I'm trading. If I see a super good setup, of course I can take it, but I don't want to hold the trade over the weekend. So it has to be in the morning so we can see the full move. Otherwise, I'm waiting for Monday or Sunday opening and taking the trade then. So yeah, I'm avoiding Fridays specifically, but really NFP day, no trading at all. Doesn't matter what I see in the market, I'm not trading on Fridays where we have news. Um, mm, is any days of
No,
week
you
that
already
you don't
answered
usually
it,
trade?
Seba.
Yeah, same.
A question there.
Yeah.
Prop firms drawdown limits. When it comes to that part, um, should should a trader look at it as the full capital of the account or use it as a drawdown? Because I see it for myself that at certain periods it becomes a factor of being a fear-based decision when I take my trades. But how should you like what approach should you have towards the drawdown limit?
I would say you should use it as look at it as a drawdown and not the account balance. I think that overall on prop firm trading, you should always look at what you're investing into the challenge. So let's just say you buy a 10K account, I think that's $150, $79. I don't know. Does anyone know the price of a 10K account? I think it's like around
It's
100
that
bucks.
around that ballpark.
Yeah. But that's the money you put into your account. That's what you're willing to lose. You don't care about losing it. So that's what you have invested, and that's what you're working with. Then you take your 10K account and break it down. All right, I can maximum lose 5% in a day and 10% overall. Okay, look at it on a daily basis. Should I be able to lose 5% in a day? No. Use base, no. You should not be able to lose 5% in a day. All right, perfect. How much should I be able to lose in a day? What am I comfortable in losing in a day? And what does my win rate and loss probability say I could have in a loss streak? Okay, so on most traders, you're looking at, all right, I can take 9 losses or 10 losses in a row and then start a new winning spree. Or the biggest losing spree that most traders are is like a 9 to 14 losses in a row. That's usually the biggest lose streak that some like the usual trader have if they have a big losing streak. So if you break it down, I can lose 14% if I lose 14 trades in a row with 1% risk with this educator or with this strategy. Can I lose 14% on this account? No. So should I risk 1% on each trade? No. How much percentage is I'm lose if I'm losing 14 trades, I'm risking 0.5%. All right, I'm losing 7%. Can I lose 7% total of the account? Yes, because your drawdown is at 10% total. So I can risk 0.5% on each trade, and I know that I can have a losing spree of 14 trades in a row. All right, then we know what we can risk. How much can I lose on a day on the same mindset? Should I be able to lose 5% on one day? No, because that means you're losing 10 trades in one day. Should you take 10 trades in one day? No, just purely no. Okay, should I take 5 trades in a day? Probably not. Is it normal to take between 1 and 3 trades in one day? Yeah, I think that's pretty normal for most strategies. I can take 1 to 3 trades in a day. Am I okay losing 1.5% in one day? I would say yeah. That seems like a reasonable risk. So now we've broken down how the drawdown works. You're also gonna see that this works on the upside as well. You gotta win 20R to pass the account. The first challenge, make 10% if you're risking 0.5% per trade. 20R is a good month, but it's still possible. So you can pass the first challenge in 1 month. But a more reasonable thought would be, okay, 10% on the first phase, 5% on the second phase, that's 15% total. That's 30R in total of pure profits. Break that down to 10R every single month. 10R on a month is reasonable. It's working. You can really do this with probably any educator, unless they have a losing spree, which happens, but that's usually 1 month. So my goal on this account should be to pass it in 3 months, and I should work for 10 hours every single month. That should be my goal for the account. I shouldn't lose more than 3 trades in one day, and I shouldn't lose more than 14 trades in a row. And that's pretty much how I would structure up the challenge account to not be too emotional into the account and work with the drawdown we're using. I'm not gonna think that if you have a 10K account, you're using 1K like of the account, because that means that I'm gonna risk $100 per trade, and that's basically nothing because you need to make so freaking much hours to pass the first challenge. So that's how I would structure it up. And then I'm also always going into to funded accounts with the knowledge that I could lose this. All right. Um, I see some questions. I gotta scroll up. What time of the day do you feel the market is best? When we have a lot of news, like what I mean with a lot of news is that we have NFP week every single month. Then London and New York session is usually the best sessions for me. Asia session is usually not working like too much. It's not moving too much. It's pretty low volume overall. So London session is really good for opening trades and keeping them for the day. So in the morning, I would say the market is best usually right now. Asia session is the best session right now to trade, from my personal opinion. Can you look at BTC, Tokyo time, when will you have entry? Why? No, I'm not gonna look at crypto. We have crypto educators, and they're super good at that. I'm not, so I'm not gonna look at BTC. I just know that it's bullish, and I'm investing a lot in it. What do you think of prop firms overall? I think prop firms are really, really good. I think prop firms is a way of stacking up liquidity, stacking up your account and stacking up your balance, but you shouldn't have them as your life saving, if I say it like that. When you take, like, if you make profit on a funded account, take it out and put it in a live account or in some other investments. Don't keep them there. Don't try to stack up money on funded accounts. Take out money, put it in somewhere else, and build up your live account. Because in the long run, you always want to have your live account. Um, how do you answer when people say trading is a scam? Um, how do I put this without telling people they're stupid? So if I ask you guys this, I want everyone to answer in the chat with a one if you agree and a zero if you don't agree. Does everyone here know what Wi-Fi is? Does anyone here or everyone here know how it works, like in big sense? I'm not saying in technical sense, just big ways of how Wi-Fi works. Can you see Wi-Fi? But you still believe in it, right? You still believe it works. You still believe it exists. Just because some random dude or girl told you that this big ass tower in the middle of the woods is sending some signals to a small freaking router in your home that's telling you that you can use Wi-Fi on your phone, sit on Zoom meetings like this, talk with people all around the world. Because you know a really, really cool thing? 30 years ago, when they launched these kind of things, no one believed in it because you couldn't see it. No one believed in Apple. No one believed in wireless fucking phones. Nowadays, if I take up a phone with a freaking wire and I hold it like this and I tap in numbers, write up a like fucking phone book or something, everyone here would think I'm insane. Because it's so easy to just put up your phone, go onto your contact list, and call the number you're already added there. Or pick up the phone, call someone on FaceTime, you can see them, you can talk with them in real time. It's the same thing with crypto, it's the same thing with Forex, it's the same thing with trading, all right? Just because you can't see it doesn't mean it doesn't exist. And for everyone saying that trading is a scam, I usually go back in the day, a really long time, and ask how did the world work before we have Forex currency? Before you had gold, before you had money, before you had all of these change things to change for products, how did the world work? My God, no, no, trading. That's how it worked. Trading. You, let's just say you were a farmer and you had a bunch of cows, and then there was another like farmer who had like fields of wheat, right? Then they traded things with each other to get what the other one had. All right? Back in the day, you always traded one thing for another because you had something that this guy wanted and this guy had something that you wanted. And then you transfer them as a trade. And because he had something you wanted and you had something he wanted, it was value in both directions. That's how a trade works. You change something of value for something else of value, right? That's just how trading works in general. So it's the same thing we're using in the Forex market. We're changing one thing of value to another thing of value because we, as traders, believe that this thing we want to change to has a higher value than the thing we have right now. So if I'm trading Euro USD, I'm trading Euro for a dollar because I believe that the value of dollar is going to go up. And then I can change it back and have more euros because that's just the basics of trading. You're changing one thing for another thing of value. And to be a profitable trader, you're changing something for a bigger value. It's pretty easy to say, but in general, trading is just changing one thing for another thing, right? That's how trading works. And it's really hard to like argue that it doesn't work or it doesn't exist or anything like that or say it's a scam because it's just changing one thing for another thing. And if they say like, oh, it's a scam, okay, how did you buy groceries this month? How are you living in a house with a roof? How are you driving a car? Because you changed your money for these things. That's a trade. You're trading money for buying things in the store. You're trading money to have a roof over your head. You're trading money for a car. You're trading time to get the money at a job. The only thing we're doing is that we're trading money for money, basically. We're letting the money do our working. We're not putting time to make money. We're putting money to make money. That's how trading works, and that's how you can duplicate money, and that's how you can build it up in the long term. So I think that's the best answer I can give you in that way, and that's also the same logic on when people say that crypto doesn't work or crypto is a scam or crypto doesn't exist. Bro, there's a lot of things in this world that doesn't exist if you say it like that. Just because you can't see it in a physical way, does that mean that it doesn't exist? No, because you don't have to always see everything for it to actually exist. The exact same way works with energy waves and all of this stuff, but I'm not gonna go into that too deep because I feel like then we can sit here for a long time. If you guys are coming with me to Spain, then we can have a like night chat about this because I have a lot of things to talk about when it comes to that way. But we're not gonna waste the rest of this call for that. So I see that the clock is 21:46, so I'm gonna give it a chance now to write your final questions, and then we're gonna round off. How to become mentally prepared for the shift in mindset required after passing. Oh, I don't know how to answer this question the best possible way because Um, I did it the long freaking run, and I did it every possible thing you could do wrong when it comes to changing your mentally and your mindset and everything about having big capital, about making money. Because the first time I had a really big capital on my account, I blew it on shoes. The second time I had a really big capital on my account, I freaked out and I couldn't trade for 3 months. So it took me a while to realize this, but basically, if it comes to trading account, you have to always think about it in percentage and don't think about the numbers on your account because then you're gonna go mentally insane, right? Because you're gonna come to a point where you have so much money on your account that you're making basically a monthly salary in Sweden with a 1-to-1 hour. Or you're basically losing a monthly salary in Sweden if you lose one trade. And if you think it that way, it's gonna be mentally hard to take trades. But if you just look at it as a percentage, 1% is always 1%. So it's really easy. And the other way of thinking it with just growing up to become rich, to get the mindset of becoming rich and duplicating money in general, I would say personal development is something you should really study. We have a fleek on Telegram for personal development, which me and Emil have made, which really, really good videos, books recommended, and other things. So I would say take a look at that and start working with personal development every single day. And that's gonna take you the furthest possible way in this business. Um, I think it's okay. get rich quick and they find out it's not, they call it scam. Yeah, that's usually what happens. Most people or a lot of people promote trading the wrong way. They say that you can come in and make a lot of money fast, and that's not how it works. But you can make a lot of money long term. And what I heard from my mentor first, and I will say it right now, is it's not a get rich quick, but it is a get rich for sure. All right? It's not a get rich quick, but it is a get rich for sure because it is working. I know it's working. You guys know it's working deep down. Deep down. No matter if you have the results right now, you wouldn't be in this call if you didn't know that it's working. You wouldn't do this every single day if you didn't know that it's working. It just happened to be that it's have taken a little bit longer time than you expected. And that's all right? That's all right. Like I said before on the educator call, it took me 2 years of constantly trading to actually start making money in a okay way in trading, all right? I made some ups and downs when I started, but to actually start being consistent in trading took me 2 years of losing money, of not taking trades, of studying every single night. So it's gonna come. It's just different time frames for every single person, all right? And everyone is different. There's no one alike someone else. So don't compare your results with someone else because you never know what kind of head start they might have had, might have help they might have gotten, and the energy they put in, the time they put in, the work schedule they have, the data in a life they have, the family support they might have, like everything like comes in. So don't compare yourself to someone else of their results. See it as motivation. If someone else has results, you know that you can also have it, right? I think maybe you told write it in the chat before most of you guys joined it. I'm just gonna copy it and send it again because I love this, and it's from the first song I played. If I could get it down, then why can't you? All right, and that's 100% facts. That's 100% facts. It doesn't matter where you come from. If someone else can do it, you can as well. So I hope you got some knowledge and some value from this call. If you need me for anything else, then just let me know in the chat after. You can either write in the House of Freedom chat or to me privately. I'll try to answer as fast as possible. But without further ado, I'm gonna round off this call. It's an amazing Monday. See you guys tomorrow morning in my live session at 8 a.m. With that said, take care, peace out, and as always, ciao, ciao.